Boom shakalaka, what is going on everybody? Randall here from Crypto Love. Today's episode is a much demanded video. A lot of you guys have asked for this, so I am going to teach you Elliott Wave theory as quickly as possible so that you can know what it is and never use it again because it's kind of useless in my opinion. But like I say, opinions are like assholes. Everybody has one and they usually stink. So if you think that's interesting, definitely stick around for today's episode. All right, now I have learned Elliott Wave theory. I read a whole book on it. Big waste of time in my opinion. But, you know, I looked at this and I was like, oh, this could be really awesome and it could be great. Well, turns out Elliott Wave came about because there was this dude, someone Elliott, Ralph Nelson Elliott, and he studied 75 years of charts. And after studying 75 years of charts, he predicted a stock market bottom in 1935. After that, everybody thought Elliott Wave theory is awesome, but it's not awesome because it's not really that accurate, and I'll show you why in the end. If you want a sneak preview, you can see right there. But real quickly, let's go over what Elliott Wave theory is, because this is what you guys want, right? It's waves, I know, right? So there's motive waves and then there's corrective waves. So motive waves go up, corrective waves go down, and there's 1, 2, 3, 4, 5 up and 3 down, ABC down. But within each of those waves, there's subwaves. So in this one up, there's also 1, 2, 3, 4, 5, and then in that down, there's 1, 2, 3. So it's 5 up, 3, 5, 3, 5, 3, 5, 3. That's all it is. 5s and 3s, okay, mixed together. And then when you're going down, it's 1, 2, 3, 4, 5, and then 3 up, and 1, 2, 3, 4, 5. And even these subwaves get split down into microwaves and different stuff like that. Not the type in your kitchen, but smaller and smaller waves. Now, what does this mean for you guys? Well, there's a couple rules that you need to know about Elliott Wave theory. And by a couple, I mean 3, obviously not 2. I should have said there's a few rules. Well, 3 rules that you need to know about Elliott Wave theory. First rule is wave 2 never retraces more than 100% of wave 1. So if we take a look at this, this is wave 1 and this is wave 2. Wave 2 never retraces more than 100% of wave 1. So that means that it has to stay above the bottom of wave 1. That's the first rule. Second rule, wave 3 cannot be the shortest of the 3 impulse waves, namely 1, 3, and 5. So if we take a look at here, 1, 2, 3, 4, 5, waves 1, 3, and 5 are all going up, being impulse waves. Wave 3 cannot be the shortest of the 3. Okay, and the third rule, wave 4 does not overlap with the price territory of wave 1. So this is wave 4 right here going down. That means that that does not overlap 1. So basically we don't want to see it coming down lower than where 1 goes up. Those are the 3 rules of Elliott Wave theory. And that's basically it in a nutshell. Now, I wrote a huge book. I mean, this has a lot of pages in it. It took a while to read. And it really was just, I don't know. I didn't get anything from reading that book. Like, I like to read books where after I'm done reading them, I think it's awesome. I was hoping that I would read this book and I'd be like, oh, I'm an Elliott Wave master now. I can go use this. And after reading that book, I was like, this is a crock of shit. Like, yeah, sure, you can analyze everything with it, but it's not an exact science, you know, like it's open to interpretation, and I'm going to show you that in a minute. Now, one thing I wanted to do for you guys, this is just like a summary article of Elliott Wave theory. I thought it was pretty good at giving you the basics, so I'll post a link to it down in the description. You guys can check that out if you want to. Now, let's take a look at Elliott Wave theory and see why it's not that great. So here is Bitcoin over the past 10 years, okay? We all know this chart. This is a logarithmic scale. Now, Elliott Wave theory, both of these waves here are Elliott waves. They both predict different prices, but they're both correct. So let's take a look at the first one, the one in yellow. So we have wave 1 going up, wave 2 coming down, not all the way past wave 1. Then we have wave 3 going up. Wave 3 is not the shortest of the 3. Right here, wave 1 is the shortest of the 3. And then wave 4 going down and wave 5 going up. Okay, and then it peaked out in December of 2017. And then from there we have coming down ABC, ABC. So this could predict like $1,000 or less Bitcoin. That's Elliott Wave number 1. Now, same exact graph, same exact fundamentals. We have a different Elliott Wave. So we have Elliott Wave 1 going up, 2 coming down, 3 going up, 4 coming down, 5 going up, predicting possibly $100,000 Bitcoin. So this Elliott Wave theory, okay, to me, you know, I don't really, you know, like I can look at the MACD and I can say, hey, you know what? You use that over 2 years, you 69x your money. I look at Elliott Wave, it's like totally open to interpretation because this is saying, yes, it's going to 100,000 and also $1,000 at the same time. And I guarantee that it's going to do one of those two things. So, Elliott Wave theory, but you guys asked for this video, so I decided to make you this video, finally get it off the plate, because I'm running out of ideas for videos. So if you have any ideas, definitely post them down in the comments. I appreciate you guys watching. Hope you have a good one. Make sure you check out the Monarch wallet. Holds Bitcoin and 3,000 other cryptocurrencies, and also Monarch Pay, the world's first decentralized recurring crypto payment. I'll see you later. Have a good one. Peace.